Hello traders, you're welcome to this video and I welcome you back to the Forex Geek channel. In this particular video, we are going to be discussing the Parabolic SAR with color alerts indicator. Okay, so if you are familiar with the Parabolic SAR indicator, then you are going to find this video insightful because this indicator is sort of like a modification of the traditional parabolic SAR. This one has an alert function and just a little retouch, okay, to make it more appealing, right? So I'm going to be adding the indicator to the charts right away. It's a custom indicator, meaning that you will need to download the indicator from a reputable site, and then you'll have to add the indicator file to your indicators library for your MetaTrader terminal. Okay, so this is the parabolic SAR color with alert. As you can see, unlike the traditional parabolic SAR that uses a single color, right, to give both buy and sell signals, this parabolic SAR with color indicator, as you can see, it displays two different colors to signify buy and sell signals respectively, right? So you can see that this purple color above signifies a sell signal, while the yellow color below signifies a buy signal. So basically, using this indicator is relatively easy, all right? When you identify the direction of the trend, because the first thing for you to do is identify the direction of the trend. It's very important to use this indicator in a trending market. One of the reasons why it is necessary to use in a trending market is because if you are trading against the trend, or if you are trading a ranging market, whenever the indicator signals a possible move, it could be a pullback, it could be a very minor move, the parabolic SAR indicator will give a signal. You understand? So if you are trading against the trend, for example, let us see here. This was okay, this is not a very great example. Let's just use this. This is a sell trend. If you are trading against the trend, once the indicator just identifies a move, the signal will appear. So here you can see that the signal appeared around here. If you are trading against the trend, you would have entered a buy, and just 3 candles away, the continuation of the sell. You can see that there was a resumption of the sell move. So do not even try to trade against the trend using this indicator, because you might get stopped out. All right, so it is better to just follow the trend. Then in terms of a consolidation market, a ranging market, the signals might come late. By the time, okay, let's use this example. This is a ranging market, right? So by the time you get the signal, let's say you get the sell signal here, and you enter a sell. Okay, this one was a little bit reasonable. It was a little bit reasonable. This was just like 45 pips. But let us look at this example here. Let's say you entered a buy around here, because obviously you ought to wait for this candle to close. So let's say you enter the buy around here, and just after entering a buy, you can see that just about 3 or 4 candles away, and it's not like there was much movement, just see about 20 something pips. So if you are not a scalper, just focus on the trending market, unless if you are a scalper. All right, scalpers will want to catch every possible price move. So basically in the trending market, when you find in a sell trend, right, when you find the purple dots appear above the candlesticks, it's a sign to enter a sell. So let's say after you've had your first high and the first low, and the first lower high has formed, all right, wait for the first lower high to form for the sell trend to be confirmed. Okay, then you can then enter a sell after you get a confirmation. Perhaps you can make use of chart patterns or candlestick patterns. In this example, we can see that this resistance zone served as a confirmation, because as the price broke below and formed the second high, which was the first lower high, this resistance served as a ceiling. And in addition to that, we had a doji. Can you see? We had a doji candlestick pattern, which signifies a potential reversal. All right, so we can see that in addition to the doji, this resistance was serving as a rejection signal. So we would have considered entering a sell right after the doji, and then our stop loss can be above the resistance. And then for our take profit, we can decide to wait for the parabolic SAR to give us a buy signal. Then with that, we can use that to exit our sell, right? So after entering, remember I said after the first lower high, after the first lower high has formed. So we would have considered exiting our sell around here. All right, there was a little buy signal here. Like I said, do not use this indicator to trade against the trend, because if you had done that, you would have gotten stopped out. So before you exit your sell, wait for at least 2 dots to form. Okay, so in this case it was just 1 dot. So here we had 2 dots form, then we would have exited our sell somewhere around here. Or you can still use other indicators to determine your exits. All right, you can use other indicators to determine your exit. Now let's quickly look at a buy example. Using this indicator is very easy. So first of all, like I said, the first step is to identify the trend. After you've identified the trend, this is the first low, this is the first high, this is the first higher low. So wait for the first higher low to form. After the first higher low has formed, please get a confirmation first. All right, so we can decide to enter a buy after we had this long bullish candle. All right, the bullish candle had already engulfed this, so we could have considered entering a buy around here, or you can just wait for the candle to close. Right, you enter a buy, you can set your stop loss below the swing low, and for your take profit, like I said, you can decide to use the parabolic SAR to determine your exit, or you can use resistance levels to determine your exit, or you can use other indicators to confirm your exits. Okay, so whichever one you prefer, they are all fine. All right, so long as you have a good risk to reward ratio. Okay, make sure you always have a good risk to reward ratio. If you are risking $1, your profit target should be a minimum of $2. Okay, so if you have a good risk to reward ratio in place, you can go ahead and use whatever exit strategy that you prefer. So that is it for this video. I hope you found this video insightful. Kindly like and subscribe for more trading insights, and do not forget to hit the notification bell so that you do not miss out on more trading videos like this. In the meantime, thank you for watching and happy trading. I hope to see you in the next video.